Well, let's talk now to Marc Ostwald, who's Chief Economist and Global Strategist at ADM Investor Services International. Good to see you, Marc. As always, welcome back. So industrial profits dropping 5.5% from a year earlier in October, the biggest decline that's been seen since June. How much of trade tensions with the US been a factor in this?
That's certainly playing a role, without any shadow of a doubt. One's seen it particularly a lot of smaller manufacturers who export household goods, furniture, those sort of things, toys to the USA. I think it's also the lack of domestic demand, which is also pressuring it, and the so-called processes of involution, which the authorities are now basically trying to counter. The fundamental problem, obviously, is with profits shrinking, above all in the older manufacturing sectors. It does put pressure on investment, as we've seen in the fixed asset investment numbers, and indeed on employment.
We did see some sectors doing very well, didn't we? Profits overall at major industrial firms growing at 1.9% in the first 10 months. What message do these numbers send about where China's next phase of growth will be?
Well, it's certainly going to be in things like anything to do with transport, so shipping, air or rail. It's also going to be in the auto sector. That is becoming more and more subject to price cutting, which hopefully the involution measures which have been implemented will counter. The question now is, the bigger challenge is, in contrast to 2015, when there were measures basically to boost the manufacturing sector and also to counter overcapacity, is there's already quite a lot of overcapacity in the high-tech, in and other similar sectors, which needs to be balanced out. Yes, there will be growing demand, but at the current stage, particularly with trade tensions with the United States, extra capacity is definitely not needed.
So China's already just made an announcement of an action plan to boost domestic demand. How can policymakers further support this and also reinvigorate the industrial sector?
I think improving domestic demand is definitely a key part of it. The key issue there, though, is the weakness in consumer demand. You're seeing it also in loan data, consumer loan data, basically weakening at the moment due to a certain lack of confidence. So it's a tricky phase now because we are in an uncertain world. There is clearly a big push to promote trade with both Africa and with Asia, and that will definitely help the manufacturing sector without a shadow of a doubt. But what would be really good is basically to counter the problems in the property sector. They really need to now to be ring-fenced so they are not such an enormous drag on GDP as they have been for the past 3 to 4 years.
Marc, thank you so much for your expertise. As always, that's Marc Ostwald from ADM Investor Services International.